Thank you very much, everyone. I love you. See you soon. Boom.
Hey everybody, thanks for tuning in to today's A1 trading session. We love engaging with our audience, talking shop, taking requests, and sharing our favorite setups. It's about that time where we're going to review a bunch of indexes, stocks, currencies, gold, silver, Bitcoin, and pretty much anything else and share our insights. If you're wondering what trades I'm in, if you're wondering what trades I'm taking, and you'd like to see exactly how I'm trading everything, you can actually follow my trading signals. If that sounds like something you're interested in, we'll share a link in the chat. You can sign up. You can sign up directly with the link or speak to a support rep if you have any questions. If you're asking, what do I trade? Pretty much everything. Indexes, ETFs, stocks, options, futures, Forex, and crypto. Thoughtful analysis, active trading. Check it out. And now, back to the show.
Hey, everybody. Good morning. Good morning. Back to it. So I did some over trading this morning. It was a bit wild and crazy. Ended up making about $55, but probably didn't need to trade nearly as much as I did. I had a pretty simple $85 to $90 profit, and that would have been just a cleaner trade. So anyway, just wrapped up a live session, and I think the key here for today's price action is these lows are holding for now. So we are making this high, lower high. You know, we had a gap lower today. Unless the bulls are going to come in and really, push this structure, I think we are pretty vulnerable below 5,900. So I think if we've got the patience on this one, if we break below 59, we have a pretty quick drop to likely, this low around 58.70. We've got this nice inefficiency from last week as well. That was on I think that was Tuesday's push. Yeah, that was Tuesday's push last week. So, if you're taking notes, I'm looking to get a bit more directional if we break 5,900. This is SPX. So obviously it can hold. Like, we can sit here and we can dance around all day and nothing happens. But if we breach 5,900, I think this thing heads down to this level, or we come back to this inefficiency, and there's another 58.30. So I do have a hedge that's going on from last week. It's on the SPY. I bought the 590 SPY and I sold the 580 SPY, and I paid $3.75. So max profit on that's about 625. But I need to see price obviously drop closer to 580, right? Which means I wouldn't mind seeing some gap filling. That trade is expiring at the end of the month. That's a 530 expiration. So I am hoping that this run, if we're going to flirt or break these lows, that this is an easy target to go back down and fill that US-China gap, or try to make an effort to do that. Make sense? All right. So I have a lot of trades going this morning. Here is, I've got, this trade's going to be ungrouped. And then I've got another butterfly going this morning. Here we go. So I've got a butterfly on for about 50 cents. And I'm looking to see if we can make a run towards, maybe doubling this thing up today. All right, give me a second. That is a 58.85. 58.65. Give me one sec. Okay, so keep an eye on that 5,900 level. I'm just going to set a chart alarm at 5,900, see if that level gets broken. Okay, put on some earnings trades yesterday. Baidu had earnings, and I did sell some premium, so we were up, down in the day. Let me check on that one right now, actually. So Baidu, 1, 2, 3, 4. This is a newsbreakers. Right now it's up about 40 bucks. I think I've got this one saved. So here's where it's at right now. So I'm up about 30, 40 bucks on the trade. I might just take the profit. I mean, I can sit and wait for Thursday, wait for Friday. It's a low risk trade. I mean, I think my max risk on the trade would have been about 80 bucks. Yes, I mean, heck, I might as well give it a chance. Yeah, max loss is 60 bucks. Max credit around 140. So I'm up about 100% on risk right now, which is not bad. That's kind of what I'm assessing is like if I'm up about 100% on risk, maybe doubling that risk or getting up to my max profit. But we'll see. I need price to stay above 86 and below 95. Above 86 and below 95. So let's see where this is at right now. It's up 30 bucks. Let's see. I'm going to try to close this one down for $3.90. Okay, I'm going to put a take profit in there at 390, see if it gets filled. That could happen later in the day. So if we go, let's go towards like near end of day today. Near end of day. It's going to be close. Yeah, we'll be close. All right, got to take profit in there, see if I can get knocked out for 390. Let's see. Alpha's another one that I put for earnings trade yesterday. I think this earnings is slightly later, so let's go ELF. I need price to go above or below. We don't have earnings yet, so I'm looking to see if this is aftermarket. What? Did they just shift earnings? What the mother effer? I literally priced this out with the earnings for this week. This had to have changed. ELF. Estimated earnings dates May 21st after close. That's why I took the trade. You sneaky turds, you. Well, we don't have earnings apparently until next week, so I think I just need to get out of this trade. It doesn't mean no good to have the trade running. Son of a biscuit. Yeah, it expires Friday, so I mean we have no earnings catalyst, so I'm going to close this one out for a small loss. That's annoying. Crap. All right, I'm out of this one for 27 bucks. So I got in for a 285 debit. Close it for a 255 credit, hopefully. 255, 254. All right. So that was annoying. So the entry originally was 285. And I closed it for 254 credit. Okay, so I'll revisit that trade for next week. Let's go some top down. Let's get some currency strength. Watch the prices closely today. See if I can get this key breakout level at 59, and then I've got a pin price around 58.75. So 58.75, that'd be a sweet little win today if I can get it. Yeah, it may not. I mean, if we go down today, it's like it may not stop at 58.75. So I'm trying to just turn a little profit if I can. So here, this little butterfly. Okay, we'll see what price looks like today. Currency strength. Just a messy currency strength chart today. Swiss was on top briefly, small volatility, 40 and 50 on the vertical axis, dollar a little bit softer. Let's have a look at our euro dollar position. Okay, now up about 150 pips on euro dollar. It's been a pretty clean trade. Like I said, long on euro dollar. If we're heading to this high, if this high gets tested, I'm taking profit and I am canceling those trades. Right? So that is the level that I'm wanting to see. Somebody asked me yesterday, like, is this going to be a big swing on the euro dollar? I mean, you're asking for the dollar to collapse if you think this is going up to like 120. I'm not saying that it can't happen, but I think the likelihood of it going to crazy highs on the euro dollar or crazy fresh lows on dollar index is a little overshot. So I think if this comes up to retest the highs, I want to get out and I can reassess the trade. Okay. All right. Now that butterfly is looking a little bit better. All right, baby. That 58.75 level is starting to line up nicely. We've got a big key level at 59. Hopefully we can break there. I wouldn't mind seeing a break. I've got this hedge on as well. This is in Pulver Alerts, the SPY hedge. So this put hedge 590 by 580. It's down $50. I paid $378 for it. So max profit's $622. I need to see price go down another $9 and we'll get close to that. I can turn this hopefully into like, I'd be happy with like $400, $500 profit versus trying to go max at end of month expiration. But let's see if we can break that 590 level first today. If we do, yippee skippy. All right, so currency chart, pretty quiet, but euro dollar is cooperating. So here's your inverse of that dollar index. So I'm just wondering how many traders are currently short the dollar index. And if you are, that's good. Just don't be greedy. That's all I'm saying. If this, remember, this either breaks and goes back to retest the lows, or this is going to be a break and a retest of the trend line again. Maybe the same high. So I just think if you're taking the trade here, you got to be willing to enter back in at the highs. Trade one, trade two, stop area. In my opinion, the safest one is going to be out of the way, above the trend line, maybe above the 200 moving average. And all you're looking to target here is the lows. If it goes lower, you turn a trailing stop loss in play and just trap that thing. Okay. Am I sick? Yeah, I've been sick for like 2 weeks for whatever reason. I feel fine. It's just my head sounds like I'm, I sound like Robert Robert F. Kennedy Jr. Yesterday I was in a meeting and I was like losing my voice, and it probably doesn't help that I talk like 8 hours a day. So anyway, that's what's going on. I'll live. Or Ivan Drago, as he puts it, if he dies, he dies. All right, let's see what's going on today. Top down, SPX. Okay, I'm going to zoom in on this one. We do have some insider candles here that'll be pretty important to watch. Inside candles, I suppose. This is the level. This high, this low. Okay, if we breach this candle low, I mean, you can tell as easy as I can, this low, this gap, this gap. The bears would be gunning for anything in here to try to find some efficiencies. Okay. But we obviously can't control price. We can't force anything. If we don't close below this candle low, or we don't close above this candle high, this is a bunch of noise in here, right? I mean, to me, after that little 4 to 5% squeeze, I wouldn't mind seeing this thing actually breach to the downside and give this a little bit of an efficiency test. But if it stays choppy today, it's like, fine. It just refuses to break 5,900 right now. But if it does, look out below. So I think we can run to 5,800 and 5,750 pretty quickly once we have the proper confirmation to do so. So in the short term, I am going to be a bit more aggressive in here. If we breach these levels, I'm going to be a bit more aggressive on some, maybe some 0 to 1 day call puts rather, maybe a bear put spread. so I can save the cost on the trades. But also I can just look at try to pin in some prices and get some, triple digit butterflies, which works out pretty well too. But so far for the day, pretty quiet, but that's why I'm setting a chart alarm, because if we breach this low, we had a low here, and so far we had a low today. But if we breach that, I think we drop. I don't know how nasty it gets. We're down about half of 1% today. Maybe a 1% sell off. Okay, so let's go from the close yesterday. If we're down about 1% today, that's right around my butterfly pin price if we push that far. Otherwise, we have another very quiet, stupid, noisy day and nothing really happens. But keep in mind, you got those key levels to watch. Okay. All right. Let's see here. Okay. So SPX there. Let's zoom out for a second, get a better context. Look, at all this noise, in my opinion, even if we have a pullback, I still think this is a good buying opportunity. It's not going to be perfect. I'm not calling bottoms on these pullbacks, because clearly we could pull back, all the way to here. We could pull back all the way to here. We could pull back all the way to here. But if you are a bull and we're not breaking this low, buying opportunity, buying opportunity, buying opportunity, right? Let's talk positives versus negatives. Why would the market try to reach all-time highs? Well, all of the drama that was unfolding in Liberation Day has basically pivoted 180 degrees to be now, what is Trump trying to do? Pass a spending bill, raise the debt ceiling, have more fiscal policy, and not talk about tariffs. Or if we do talk about tariffs, it's because this deal after deal after deal of countries that we're trying to figure out, how we can improve, our trade relations, meaning like the U.S. is going to pull in some type of revenue from these tariffs, and on top of that, try to pass a tax bill. So a lot of things have shifted aggressively from like extremely negative sentiment to now what is pretty positive sentiment. End of day today, we should see the AAII sentiment print as well. And for the first time in 11 weeks, we printed less than 50%. It's still beyond the norm of bearish sentiment, but it's been reducing a little bit, steady each week. But it's still one of the worst stretches of sentiment. Again, I said this earlier, like sentiment is not a signal, but man, when we had extreme sentiment here, it was a good indication to say between that and market breadth, you had a really good buying opportunity. Now that it has drifted to the upside, I hate the fact that we'd have to swing from negative sentiment all the way to like greedy, optimistic, overly bullish sentiment, and maybe we just settle somewhere between. So I mean, I would just like to see this market have a little bit of a pause, maybe a little bit of a pullback, and maybe it's really slow, right? Maybe it's a super slow pullback. But to me, the slower this pullback is, the more accumulation it looks like we have for this to start catching bottoms and then work its way back up. What I don't want to see is some like nasty candle, unless the next day is going to come right back and fight back. Or if you have a nasty candle to the downside and then you have an indecision candle and then the next day we start fighting back. It's like none of this stuff is under control. We trade price action, we trade levels. I just want us to be aware that, that to me is a attractive spot to be looking for a buy opportunity. If it pulls back deeper, there's area 2 and there's area 3, right? If we get into this second area or third area, I'm going to be positioning for ratio spreads out here. This is going to be my income area. I'm trying to spell income there. Try to write it. But my point is, if we see the volatility jump a little bit, then I'll probably start positioning some SPX positions, some NDX positions going below the April lows and seeing, even if we just say chopping here, 45 days, 60 days, generating some income. Prices don't have to do anything. Okay. Mortgage demand drops as rates hit highest since February. There you go. There you go. We're fixing everything. Higher rates on mortgages. You're welcome, America. Look at your 10-year yield. We are pushing higher. Look at your 20-year yield. We're pushing higher. Look at your mortgage rates, 6.81. Let's go to Mortgage News Daily. I'm literally going today to look at my house. I'm 1 week away from closing. And I mean, I'm not happy with the 6.6, but I'm pretty happy we locked it in because it'd be 6.9 right now. Look at that thing. So we got Mortgage News Daily showing about a 6.99% rate. This is as bad as it was. I mean, we were higher, I suppose, back in January of this year, and then last year was really bad. How bad did it get? We had 8% back in October 2023. So pretty crazy, man. I mean, you've had a 2% swing from worst of 8% to best of like 6.1. But I think I don't know, the days of sub 4%, days of sub 3%. I mean, if you have rates locked in at those levels, you should be, thanking your lucky stars because that's unlikely going to be seen, I think, in a long time. We'd have to have another pretty severe crisis for that to be the case. I think we're just going to have stickier yields and stickier inflation. And yeah, I think that rates don't necessarily budge and go down, but I think house prices come down because supply is going to sit. Supply is going to catch up in new builds, and then existing inventory is going to sit and get stale. And people are going to think that, why can't I charge 500% for what I paid for this house to sell this thing? So instead, they're like, well, I paid $200,000 for my house. I think it's worth $1 million. So I think, but if you want to sell it, you probably have to sell it for like $500,000 or $600,000. We're probably going to experience about a 20 to 30% haircut in house prices, existing home sales, until inventory catches up or when it catches up. All right. Anyway, just saw that headline. Let's talk gold and silver, everyone's favorite. Make sure to miss any comments here. MAG7. There you go, Lee. I like it. Yeah, MAG7. So I think the make or break on MAGs, and this might be quiet towards the end of the month, but earnings on NVIDIA is, I believe, at the end of the month. So May 28th. So this will be next week. This is probably the make or break on, I mean, look at this. Where the price action here is almost identical to here. So if NVIDIA, blasts through earnings, then I think MAG7 is, off to the races again. If NVIDIA somehow disappoints, which the news has switched a little bit, and NVIDIA has been a little bit more positive in the news, sparking a deal with, is it Saudi Arabia? Sovereign Wealth Fund? Or Qatar, is it Qatar? They're doing something. It's like they're essentially building out, like a AI infrastructure plan or project with, I think it was Qatar. I could be wrong. It was something like, it's just positive news is flowing in NVIDIA, and I mean, it's made a pretty good comeback. So NVIDIA, off the lows. I mean, I have naked puts down to 70. I've got a collar trade where I can let it go. I'm going to keep selling calls. All my covered calls are totally fine. So, still extracting premium out of Russell. Same thing out of Tesla. Same thing out of MicroStrategy. Check some Bitcoin. Bitcoin's at 107. IBIT's at 61. I don't have anything covered anymore. I got my $62 covered calls last week expired, so that was full credit. I think I've got this account that has a 61 covered call on IBIT. Yep, so it's right there to the end of the month. I'm just going to pull out as much of this $1.19 as I can and then sell it again. I'm just going to roll this. I don't want it to get called away. I bought it at 59. I lowered my cost basis to 57 and change. But I don't want it to get called away. Like I want IBIT to be a part of my portfolio. Okay. All right. So anyway, this will be an interesting spot. If we are, testing highs and we pull back, okay, fine. There's another opportunity to accumulate in Bitcoin. But if we break these highs, I think this is the world speaking. I think that the whole idea that the U.S. and U.S. bonds, U.S. Treasuries, I mean, look at this thing. TLT's down to fresh lows. Okay. I mean, unless we have risk-off trading, bonds making fresh lows. I mean, there is a potential squeeze here. I mean, if TLT drops to like 80, and again, as a trader, $83 to $82 on TLT could be a fantastic short-term buying opportunity. But longer term, I don't like it at all. I am doing everything I can to actively get rid of TLT, get rid of bond exposure. I'd rather have gold. I'd rather have silver. I'd rather have Bitcoin. Okay. So the diagonal spread that I have, I mean, my cost basis it's a 65 by 89 right now, and I'm going to continue to lower it. I have time in the trade. It's just more, I'm like I said, trying to actively get rid of some of these stocks or TLT. I'm trying to get rid of that exposure. All right, so do a spot check here in SPX. Okay, so I'm getting some small profit lining up on that butterfly spread. Hopefully we can breach that 5,900 handle. I'm watching that on my other screens. Let's go gold and silver. So gold, if you're buying gold, that's fine, but at best it's probably short term. I think gold is still going to be lower high, lower high, lower high. Okay, if we turn back to a lower low, again, the more orderly this is, the more organized this pullback is, the better. Okay, so I just based on the bar count, I'd still like to see this either slowly work its way down. And if the stock market's going to continue to push higher, if we ink up some trade deals and we're marching to all-time highs in the U.S. equities, that's probably going to put more of a cemented top on gold for at least the near term. But I think a range trade is great. If you get a trade that offers up a dip between 3,000 and 2,800, I really like that trade going back up to test the highs. Obviously, going higher on gold could be exciting, but I'm just, as I've been now for a couple of months, patiently waiting based on this really high bar count, and I'm hoping I can just get filled at that level. So I'm going to wait. I'm not buying gold. I'm waiting to see if we pull back into deeper dynamic support, and I'll trade it from there. Once we get into those levels, if we do get in those levels, then I'll look at some GC futures trades. I'll look at some GLD positioning. Silver looking better. Okay, I mentioned silver. I kind of like this short-term structure. I'm not long out of this right here. I'm not long, but if this heads up, if it breaks this resistance, there's nothing stopping silver above 35, which makes me pretty happy. Like this to me is a run to 45 or run to $50. Okay, if we see the gold and silver comparison, okay, what do we have to see on this? Well, if this breaks and goes back down, this is a huge inefficiency. So if this breaks and goes back down, that would be, silver catching bids, silver outperforming, silver ratio improving, and maybe we do breach that 35 handle on silver. If we do, I'm long SLV still. I'm holding a bunch of shares. I'd be looking to maybe scalp on some bull put spreads on silver, or I'm sorry, bull. Yeah, maybe bull put spreads, maybe just some credit spreads, maybe some ratio spreads on futures. Okay, so looks pretty good. Bitcoin, I mean, we're pretty close to all-time highs. Highs around 109. Keep in mind, I mean, I don't see this indicator fail very often. Overbought conditions with divergence, it printed right here, and we did drop. So we have started printing overbought conditions with divergence. So if I show this workspace, let's go this one. Okay, this is why I'm not super stoked about buying these highs. We have higher highs in price, we have disagreement, and we have hidden bearish divergence with your relative strength. So we are overbought, and we also have divergence. So again, look, if it breaks and goes higher, awesome. There's an easy way to trade that, right? If we break here and pull back, that might still offer up a chance to buy a dip. But don't be surprised if this is a test of the high, a bit of a bull trap, and then the market comes back in and finds some inefficiencies. I still think as a swing trade, like this is a good spot to accumulate in here, and this is a good spot to accumulate, and this is a good spot to accumulate. if Bitcoin traders and investors are lucky, then you'll have a chance to buy back here around 90,000 and back near the lows around 75. Because if and when we break these highs, I mean, we're talking 120, 130, 140, 150. And look, at this point, I would say it's game on, right? Like this whole idea of like measuring Bitcoin, look, it can still work out and be really technical. But the reality is, if we break 109 and we stretch to 120, 130, 140, 150, the story becomes a lot more self-fulfilling about Bitcoin and what it stands for, how it's kind of broke the cycle this year where it's not really acting like it's pure risk on. I mean, this is now acting as a legitimate diversifier. Gold has been a diversifier. Bitcoin is a diversifier. Not behaving the same way as the S&P and the Nasdaq. So anyway, we'll keep an eye on it. I'm hoping we have opportunities to get filled. I leveled in, so I bought some 59.50 on a pullback, and then I have this is IBIT, by the way. So IBIT right here. So I bought some around 59.50 on a pullback, up a couple of bucks. Like I said, the $62 covered call did not get called away last week, so I'm just keeping it uncovered. If we start to head lower, if we start to turn lower, then yes, I'll sell some covered calls and I'll just continue to grab some income there. But what I don't want to do is if we're heading higher and marching higher, I don't want to sell calls into that breakout. So I have pending orders here around $52 and a pending order here around $45. So I will buy more. I will buy more, and I'm going to maintain a decent position in the portfolio dedicated to IBIT. MicroStrategy, if we break these 430 levels, I've got a bull call spread that is potentially offering up $1,150 of profit. Cost me $3.50. I need more time in the trade, but if I could turn 330 into, let's say, a $7 credit, $8 credit, if I'm up to $800, let's say it's like trading for like an 830 credit, I make $500 on the trade. Like I'd be okay with that. Being more capital efficient, I might just take the profit. But I'm trying to push this thing as close as I can towards like $1,000 profit. Okay. Coinbase, since it was announced it's going to the S&P, Coinbase has had a nice sort of rip. My ratio spreads worked out well there. Ethereum, is anybody buying Ethereum, by the way? Just going to ask, is anybody long Ethereum? I mean, honestly, I'm hoping you're not long here. I mean, this wouldn't have been a bad spot. You at least have some profit to show for it now. But if you kind of patiently waited for a trend line break or this trend line break, like I said, it's got good. That sounds like good English. It has a solid reward to risk setup. If you're willing to trade small, 1, 2, stop area below the swing. I mean, if you dollar cost average in, this is roughly your reward for risk. So it's not a bad trade. I just personally would rather trade Bitcoin. I think Bitcoin, it's just kind of to me, it's like the poster child of Web 3.0 and AI and the digital economy and decentralization and the fiat system, like all these things. It's like the story's been being built about what Bitcoin stands for. And the higher highs we see on Bitcoin, the more it reinforces the story. So it's kind of crazy how it's all started and how it's become what it is today. And I just think that story could grow. I did have a conversation yesterday with somebody that what would be the biggest threat to Bitcoin and the biggest threat to the crypto market in general. Two things I think would be the biggest threat would be threats and risks on Bitcoin and crypto. Look, crypto is filled with a ton of scams. So that continues to be a thing. That's why I don't trade pretty much anything else other than Bitcoin. So I don't care about meme coins. I don't care about Trump coins, Melania coins. I don't care about, it's like Bitcoin's what I'm going to focus on. But the threat would be that the companies claiming they are allocating raises for Bitcoin buying, right? Like kind of the MSTR style If there's fraud there, if it's like, oh yeah, PayPal's doing it, Block is doing it. There's a website that's dedicated to all these companies that are adding Bitcoin to its treasury. If they're raising capital to buy Bitcoin, and it turns out that they're not doing it, and there's fraud, like when there's smoke, there's fire type thing, like that could be another big blow to the market. Is that going to happen? I hope not. I mean, I would hope that Michael Saylor is true to his word, and he is essentially, MicroStrategy is acting like a proxy to Bitcoin. That's all it is. Like, they have terrible earnings. They're barely a software company at this point. It's just a proxy and a peg for Bitcoin. But if other companies are trying to get behind the same type of strategy, is there any fraud there? The other one would be stable coins. Okay, similar to what we had in 2022 with FTX. Stable coins, which are supposed to be backed by U.S. Treasuries, if somehow these get, like, there's a lot of gray area between, like, are they really backed? Are they backed by Treasuries? Do they collapse, or their stable coin collapses in the coming years? It's like, those are still risks, right? Those are still risks. So anyway, we'll see. But other than that, I mean, I can't ask for a better potential upside and potential asymmetry. I think Bitcoin does offer that. I think it offers a lot of optimism for something different. I think the consensus is growing that we are, heading towards some type of, like, fiscal trouble. It's not just the U.S., it's the whole world. I mean, there's, like, I don't know, 3 to 4 times leverage with every asset because of all derivatives and all the leverage in the financial system. Like, it's nuts how much leverage there is in these markets. So that can a de-risking, a de-leveraging could be very ugly. So anyway, whatever. I'm over it. Copper, my lottery pick, my lottery butterfly trade in between these levels. We'll see how that plays out. Japanese yen. I'm just going to be patient. This trade initially was my trade on Japanese yen. This is looking a lot like the dollar yen. If you flip over the dollar yen compared to Japanese yen futures, it's basically the same trade. So dollar yen has been short since this resistance around 148.50. It didn't quite hit perfect support, which have been right here, which have been great resistance around that 149 handle, but it has turned nice for 1, 2, 3, 4, 5, 6, 7 days in a row. XRP Dogecoin, you're preaching to my exact point. I don't care about anything other than Bitcoin. Like, my buddies were in Shiba Inu, they were in Doge. I had Ripple. Like, my first trade in crypto was Ripple. And I had to hold that thing through the SEC probe. I had to hold that thing where you couldn't do anything and you couldn't get rid of it. Finally, I waited long enough where I could roll my Ripple into Bitcoin, which is what I ended up doing. But I just don't care. Like, I don't think any of those have. When you have unlimited supply, I don't think that means anything. And you can make coins. Like, there are new coins coming to the market every single day, and that's something I'm never going to try to keep up with. So I'm not interested in chasing a meme coin. I think Bitcoin is it's the S&P of the crypto world, and hopefully it stays that way, and it's securitized and it's backed. I mean, you got big institutions into it now, which I'm hoping it's here to stay and have some clout and some stay power. All right. Anyway, that's dollar yen. Like, I don't know if anybody turned if you follow this short term and you turn this thing south, that's great. I mean, one thing to watch in this would be zoom out. Okay, this is my measured move. Look, it's pretty obvious to me on the dollar yen that if we hold 140, it's going to be a bigger range trade all over again. But if we breach 140, okay, you want to talk about some pain for the U.S. market, some pain for the U.S. dollar. Go ahead and measure this move right here. Okay. So there's symmetry. There's symmetry. We bounce right off that level. Go ahead and just break this neckline. If we break this neckline right here, I guess I can move this up slightly. If we break these lows, we're talking dollar yen down to 120. What I think is very clever about that is this is back to the 2022 breakout point. That to me is that's a pocket. I think we find it. So again, one of my least favorite trades is yen crosses. But if we are getting a fundamental shift, and the dollar is going to get weaker and the yen's going to get stronger. By the way, I just saw this last night. I don't think I took a screenshot of it, but Japanese bond yields have gotten to all-time highs. I think it was the Japanese 30-year bond yield. Let me see if I can find the chart here. So JP 30. Here it is, JP 30. Look at this thing. Okay, we are at all-time highs in the Japanese 30-year. This is why U.S. yields aren't going down. Look, if Japanese yen, which acts as a safe haven, is now offering yields that have not been seen for decades, right? This might be flows of Asia dollar gaining strength over the U.S. dollar. Okay, so point is, I take a situation like this. I mean, we're all-time highs in the Japanese 30-year yield. If we go to the dollar yen and we break this floor around the 140 handle, okay, and it's not like I just want to sit here and sell a bunch, but from a trader's perspective, if we are in and we're less than 140, I think if you go down to a smaller time frame and you look to sell any pullbacks, I think we go down to 120. I think 120 is very doable. Okay. Now, that's a big trade. Like that is on my radar as something like I'd be interested in that trade. That being said, I got to have a plan to exit too, because if we test the floor here and we bounce back up and it's a bear trap, like obviously I don't want to sit here and scale into it, be like, it's going down. I mean, this thing could come all the way back to 150, 150 and change and come back to, I mean, this is how much I trust the yen. I don't. But if it's open space and it's going to the downside, sell with a plan, go to precision on a smaller time frame, but you could have 2,000 pips of potential profit there. Like that's a good looking trade, but I want to see it break. Also, look at this weekly time frame. This weekly time frame below the 200 moving average. If we break below that, this would be a fantastic sell zone. And typically we see if the Japanese yen is getting stronger, like it did here and even here, volatility is pretty fast, right? Volatility tends to come in pretty fast. So we'll see. But like I said, keep an eye on it. All right, let's go. Okay, I'm just looking back at this chart. It's like this level is still holding all morning. It's been chop suey. All right, that's dollar yen. What else? We did some stocks. We did some MAG7. Let's take a look at our market breadth. 78% of stocks on the S&P are above the 50-day moving average. This is a weekly chart. I don't know. I mean, I hope we get a pullback first, but if we don't, then my pullback timing is going to be something where this thing's up like 90+% of all stocks are above the 50-day. Then there's probably a short-term correction. I hope we get a pullback first. I'd like to participate. 53% of stocks above the 200-day. So, again, we're getting a decent amount of market breadth where stocks are now recovering above the 50-day, above the 200-day. It's not a ton, but it's over half. So this, as far as like a broader market rally, could be pretty good. Nasdaq, 81% of stocks above the 50-day. Another one for market timing would be if we get up to here, we're about 92% of Nasdaq stocks are above the 50-day, probably a short-term top. Nothing crazy, like a simple like spread, simple debit spread, credit spread, like nothing bait, just an income trade. Okay, not like positioning for a crazy bearish move. Stocks here, Costco. Let me check Spotify. Spotify's at 658. I've got a 620 expiration on this one. It's a broken wing. I'd like to see this thing drop a little bit. Costco. Well, I mean, my ratio spread at the 100. The 200 moving average worked out pretty well. I still have some trades running with 111s that are down here in this yellow box. Walmart at 97. Got it covered at 100. Nike, see if we can hold these levels. SPY is probably heading back to frickin' 593 right now. Let me see something here on SPY. SPY for today. Darn it, it's going to be just a terrible trade. Do we fill the gap? I mean, that's way cheaper. Do we hit 593 today? All right, I'm going to get into a couple contracts here. Try 15-cent fill here. All right, I'm going to take that trade real quick. As a buy, 592 call, 593 call, 594 call. Okay. I'm going to set a chart alarm at 593. See if we turn that real quick. That's right around the gap fill from yesterday. Okay. So if we get a gap fill here, SPY, same thing there, 593. Yeah, that bull put spread combo I did this morning was the play. So see if we can push up a little bit higher. All right, what else? More currencies. I'll go for a few more minutes. Let's go back to this SPX. Bias on Bitcoin. Gerald, you come in late. I did gold, I did silver, I did Bitcoin. We did a bunch of stocks. We did MAG7. So Bitcoin, I'm long, man. I'm long. I think that we break all-time highs. I think that this growing consensus that the U.S. bond market is in trouble. And look, the bond market could be in enough trouble that it does hurt the equities market. But I also think it's going to force, possibly Trump and co. to do something like, hey, we're going to raise the debt ceiling. We're going to pass this big, crazy, beautiful tax bill / whatever bill, whatever garbage they stuff into it. It's going to be the same as any other president that wants to do fiscal spending. Like, nothing special is happening in the U.S. right now. We're still operating at way higher deficits than we need to. We're not reducing spending like we said we could. And it just shows like that's what the financial market did. The financial market flexed and said, if you mess with this, you will break something. And these are the ramifications. So you can see how hard the pivot was on April 9th, right? And since that day, like, the news has been quiet. Everything is about how good everything's going and how good the deals are coming along, blah, blah, blah. So I think that Trump and company are going to go back to exactly what Biden did, which is just spend a bunch of money. Meanwhile, the Fed is not wanting to do anything. However, what the Fed could be doing is they could raise their inflation target. Instead of this unrealistic 2% inflation target that we haven't seen for years, they could just say that realistically we're operating in an arena right now that's maybe closer to 2.5%, 3% inflation. So what would that do to U.S. core PCE, right? If we have core PCE, where else? Core PCE. Nope. Nope. What the heck is it? The annual one? This one. Okay. So we're at 2.6. So here's what happens. If the Fed says, look, we're changing our inflation target to 3%, well, core PCE is at 2.6. realistically, they could still have enough room to lower rates and say that they're not as restrictive. Like right now, it's funny. Like this is technically a restrictive policy, you know, but I just don't know if either the market prices this stuff in for the Fed, which is not a good thing because that's going to be really disruptive, or if the Fed is going to actually do something proactive for a change. And that's, I'm not super confident they're going to. I could see in typical Fed fashion that they don't do anything, i.e., they don't raise the inflation target. They don't cut rates until maybe September, December this year. And meanwhile, yields continue to go higher. And look, the bond market yields are going to force their hands. Like if this goes higher, I mean, the Fed is going to have to react to it. Like this is not good. This is going to choke out growth. This is going to be that potential like stagflation. This is going to be that stagflation threat that the Fed doesn't want to see. So either the market makes them do something or they should do something. I just don't know if that's going to be the case. You have like very opposing authorities right now with Trump and what he says and Powell and what he's doing. The Fed is independent. They shouldn't have to be coerced, from government. But again, it's a weird situation. And if this goes higher, it is going to put a lot of pressure and possibly choke out growth in the markets. But bigger picture, I think U.S. government's still going to spend money. They're going to raise the debt ceiling. They're going to pass, some type of tax bill. Maybe. I mean, I think if Republicans keep the majority and they vote on that majority, then we go to all-time highs and we have a global melt-up. I keep talking about this, but I just wouldn't be surprised if we have a global melt-up that, on a clean chart gets us up to like 6,400 SPX, maybe 6,500 SPX. I just don't think this is something we want to fight. I would be very disappointed if we don't have a pullback, but I'm also thinking that, this market may not give a crap and it just goes. Right. And it goes up here and it takes out highs with momentum because everyone that's been on the sidelines, look, who can tell me who's been buying these dips? Who's been buying these dips? Everyone treats retail traders like we're the dumb money, right? Retail traders, dumb money, contrarian. Look, sentiment was bad, but retail traders were the only buyers in here. And retail traders were the only buyers in here. And retail traders were the only buyers in here. Like institutions are quiet. And what have they been doing? Holding, not doing much of anything. So, I wonder if institutions, and this is a terrible entry, but if institutions are going to wait and see, like, what? There's so much momentum behind this that the coast is clear. And they jump in and they were sitting, at gains for the year. They weathered the storm and they start to participate at pretty high levels. So, and even if we hit these highs and we pull back, look, this is still a head and shoulders pattern, in my opinion. I still think that gets measured out. Right? So I just think that the melt up, and it's not just the US, it's the world. Okay. China spending money, Eurozone spending money. US is likely going to spend money. This was the threat. US is going to cut government spending. US is not going to spend anything. Fiscal policy is going to be cut to nothing. It's only going to be monetary policy. We're waiting for the Fed. That changed. Now the government's spending. China spending, Eurozone spending. We have money supply. We have liquidity. We have increased across the board. This to me is where I think we get a global melt up. Global melt up could be a lot of fun. It could be a participation where you're like, holy crap, I can't believe how high this thing went. However, I think when and if that it's overcooked and over its skis, I think that is going to be another 20, 30, maybe worse correction. Because at that point, you're talking about how high the deficit is. What's our debt to GDP? How bad is it now from a global debt perspective? And that might be the big turning point, But we could be at 6,500. We could be at 7,000. Nobody knows. So anyway, I'm just saying, right now, any dip we get, I'd like to buy it. I don't know if we're going to get a dip. That's what's so frustrating. Is like I don't know if we're going to get a dip. I hope we do. Okay. But as always, if it was that easy, everyone would do it. But it was interesting, like the market was dealing with legitimate systemic risk and it pivoted hard. And now it's like nothing's going wrong. So I don't like how the sentiment has shifted from extreme fear to now like getting into we're almost tapping into extreme greed. And so somewhere in between would be nice. I mean, realistically, it's like let's not break the highs, let's not break the lows. Let's actually have a year where the next leg higher would be actually proven and confirmed and justified. Because the one thing that's been exhausting since 2018 has been asset bubble, burst, asset bubble, burst, asset bubble, burst, right? 2018 was a volatility event. Melt up into 2019, 2020, COVID. That was a pop. Melt up into 2022. That was a pop. Melt up into 2024. We had a flinch in August of 2024. Roll into 2025. We had a pretty nasty correction. It's like we're getting lots and lots of 10, 20% sell-offs. So anyway, we'll see. But if we get pullbacks and buying dips, don't be surprised if we melt up the highs. Okay. If we get to highs, I see this playing out a couple of ways. One is it's a head and shoulders and we do pull back and that makes our right shoulder. Or two is it's a range trade and we come all the way back down to the lows again and we just deal with the range. And all this growth is not justified. We're at these highs and the market's going to return not what it should, right? When we're at like 25 times earnings on the S&P, that's historically high. And we're at 25 times earnings, mostly led by large market cap companies like MAG7. So again, it's the same cycle. You get overbought, you get overextended, you get too concentrated. Market's got to find a way to ventilate it. But again, I would probably put the probability more so of a bubble to the upside versus another big crash to the downside. I just think the landscape has changed. So unless there's a big flip in like trade war sentiment again, and it turns negative, I think this market is going to figure out how to just keep grinding higher. So all right, there's my rant for the day. Currencies pretty much the same. I'd like a pullback on Aussie CAD. I'm still looking for a swing trade. Swiss pairs. I'm not buying dips yet. I'm still profitable. I'm still waiting. This is my level that I want to take it back to for target 1. If we get to here and then a pullback, I'm taking a swing trade for a symmetry wave 3. Aussie yen, no trade. Aussie New Zealand. I'm hoping I can get a dollar cost average in at 106, 103, 101. Aussie dollar, not trading this, but if you like, this is my RFK voice. If you like Aussie dollar, small, even small, stop loss below. That's not a bad trade. It's open space. If we have risk appetite, Aussie is a direct beneficiary of risk appetite. Doesn't mean the dollar has to go lower. If you're going to see dollar go lower, you're going to see the euro dollar go higher. Like that's the correlation because it's the DXY is heavily weighted in the euro. The Aussie is a slim piece of that. But with risk appetite, the Aussie does really well. With risk appetite, the New Zealand does really well. There's open space right here. I think that's a good trade, but you got to trade it small, right? Because if this turns for a pullback, then yeah, I want to buy some here, and make sure we don't invalidate those lows. That to me is a really good swing trade. CAD Swiss, I'll wait. This is going to be my level. So a lot of support back here, 200 moving average. That could be a profit level 1 for me. That gets me into profit and then a swing to some type of symmetry. But this one's a little bit uglier for right now. I'm just going to see if it just works its way up. That would be a nice pattern trade, wave 3, something like that. That would still require gold correction, I think. Swiss yen, no. Euro Aussie, nothing. Euro CAD, I said if you like the sell trades, it's messy, but I like the sell trade in Euro CAD as long as you don't take out the highs. Euro Swiss, it's okay. I'm still holding Euro Swiss long. Euro Pound, no trade. Euro Yen, no trade. Euro New Zealand, no trade. Euro Dollar, I'm long and holding long. If we get to 15.50, I'm taking profit. Pound Aussie, no trade. Pound CAD, no trade. Well, Pound CAD, maybe. Small trade here, and then a small trade at the high, stop loss like 1 ATR higher. I think you could turn this into a pretty good reward to risk. Not a bad trade. It's a little volatile, but just trade it small. Could be okay. Pound Swiss doing his thing. Hopefully we head up to 12.50 and 13.50. Pound Yen, scalper's paradise if you like it. Pound New Zealand, no trade. Pound Dollar, new highs on the Pound Dollar. Interesting. I'm not trading it. I think this is a bull trap. Maybe it pulls back first. If it goes higher, then I'm going to miss out on the pound dollar because I'm not in it. But if we go higher in the pound dollar, I would imagine that my euro dollar is also going higher. So I'll take a winner there. New Zealand CAD, same thing as Aussie CAD. Pull back into this zone looks pretty good for a swing trade. New Zealand Swiss being patient, but hopefully we're going to head back up into this area. So this is one. Maybe this is all one big wave. I hope this is one big wave, because this is one big wave, pull back for a higher low, and then symmetry swing to get me out for some profit. New Zealand yen, no trade. New Zealand dollar, similar to Aussie dollar. Do you like this one enough? Right? I mean, Aussie dollar looks a little bit cleaner, but if you like this one, it is open space to the upside. You got to be prepared for, another buy in here and a stop area below the lows. But open space, risk appetite, New Zealand dollar does well. Risk appetite, Aussie dollar does well. There is about 500 pips there. About 500 pips. It's not nothing. Not nothing. Dollar CAD. Glad I didn't force a trade here. I'm out. I got no trade in this one. If we come back down to like 33 or 3,200, possibly a buy opportunity again on dollar CAD. What would be nice is if we drop hard on dollar CAD and we leave some pockets and inefficiencies, then sure, I'll look at oversold conditions. I'll start to take it back up. This is a really good halfway point in a range trade. Dollar Swiss, just going to stay patient on this one for now. Dollar yen, as we mentioned, if it breaks the 140 floor, you could be in for a 2,000 pip sell-off, which is just a pattern trade. That's all it is, just a pattern trade. But could be a lot of fun. That could be like months. That could be months. That could be months of direction. But if you align it, trade it on like a 1 hour, 15-minute, 4 hour, just keep the structure. You can trade that precise with precision on the lower time frames. Okay. All right. I think that's going to do it for today. Any other questions? I'm watching. So I've got 592 and change on SPY. I've got some other trades running here. So SPY. Where's it at? So this is a butterfly spread. Right now, small profit. Price goes up another $1. This will hopefully be trading for. I put in 3 contracts, so $45. Yeah, I should be able to grab maybe $50 to $75 out of this trade this morning, which wouldn't be awful. So gold, we talk gold. I'm just waiting for a pullback. Okay, I mean I'm sure I've got traders out there that are so like, I'm long gold. Cool. But I'm telling you, I'm not long gold. I'm holding long gold. I'm holding positions, but I want to add to them at pullbacks. So I think gold either, has a corrective move like this, back down to some dynamic support, or it pops back up to the highs again, fakes out, and there's a range trade that these levels catch up to it, and you can buy that support right around that 3,000 handle. But I want to see a little bit more testing of that before I just say, okay, I'm in. So, like I said, I think silver is a better trade. I like silver. I'd love to see silver break these highs. And I've got measured moves on silver up to like 48. So that to me gets me a little bit more excited as far as where could silver be. I mean, gold can go with it. Gold can also perform very, very well. But when I can measure a move here versus trading to the moon, like all-time highs, what do you do with it? Silver is a better trade for me because I can see it. Okay. All right. I'll let you go right there. Have a good rest of the day. See you soon. Thanks. Bye.
Thanks again for watching today's show. Our goal at A1 Trading is to continue to share free value to our audience through daily videos and articles, keeping you up to date with the latest market coverage. If you enjoy our content, make sure to subscribe for more. From all of us at A1 Trading, have a great day, and we'll see you next time.